Upfront mortgage insurance premium. On all government loans, there's a fee that they're going to charge, and they're different for each one. So you have Federal Housing Authority, FHA, you have the United States Department of Agricultural Rural Loans, USDA, and then Veterans Administration, which is VA. And all of those entities are not lenders. They write the guidelines that the lenders have to adhere to in order to fund those loans. And those entities charge a funding fee. So let's go over them real quick. FHA, if you obtain an FHA loan, you're going to pay a funding fee of 1.75%. It's not an upfront fee, but it's added to your loan. For a USDA loan, it's 1%. And for a VA loan, there's two fees, depending on if you're buying your first home or a second home. And there's instances on a VA loan where you don't have to pay a funding fee at all. So be reminded of those fees because they add to your payment. James Lawler, thank you. Okay, when you purchase a home or refinance a home and you're borrowing more than 80% of the value of the home, then you're going to be required to pay private mortgage insurance. The government loans, FHA and USDA, they have a factor that they're going to use based on the amount owed, and that changes every year as the amount goes down. With conventional loans, it's based on your credit score. So it's more of a risk-based policy where it's going to be competitively searched around to see who offers the best rates for what you're trying to borrow and how much you're trying to borrow against and what your credit score is. Now, the private mortgage insurance can go away on a conventional loan at 78% threshold. It's not automatic. They'll send you a letter and you can request it and typically it'll get done from there. But on government loans, it's never going to go away. It just gets lower. So just be aware it's an additional part of your payment. James Lawler, your local loan officer. I was getting a down payment assistance programs. There's the most down payment assistance programs out there right now than there ever has been, and I think in the history of mortgages. And what is nice about it is some of them don't have repayment options, or they have a timeline where the down payment assistance will be forgiven. So when you're seeking these out, make sure you're looking at all areas, your county, your state, federal levels, what down payment assistance is available, what repayment options are available, what you have to do to qualify, because you forget about it when you get into a down payment assistance program and you get the home and you forget that there's a repayment option. It's a silent second, no payments required. You go to sell it or refinance, and all of a sudden you go, oh, wait a minute, I have this down payment assistance. So just make sure you understand what it is, what you're looking for, and seek out the best ones available for what you're trying to accomplish. All right, James Lawler, have a great day. All right, James Lawler, your local loan officer, and today we're going to talk a little bit about land contracts and what you must do when you decide to get a home on a land contract or buy a home on a land contract, or I don't know what else land contracts can buy, whatever you're going to buy. You need to record a memorandum of land contract 1,000% of the time. The memorandum of land contract will be recorded, so if the individual that owns the property, because you don't own the property yet, you don't have a warranty deed, it doesn't convey ownership in the United States. The land contract will be in the chain of title, so if that individual tries or is going to go try to sell a property or get some type of loan against it or lien against it, that lien will come up to protect you. So when you're going to exercise a land contract or get into a land contract, 1,000% of the time, record it with a memorandum of land contract to protect yourself. James Lawler, have a great day. Okay, all right, let's just understand when you want to close on a residential mortgage transaction, you can't use cash. So you have to, it's called sourcing the funds to close. So you're going to be required to, get a couple months bank statements or a couple months statements of the retirement account that you're using, or money market account, or whatever it is that is a verifiable asset in an account. You have to provide those statements in order to clear the amount of money you need for your down payment. So just remember, those statements can't be a screenshot. They have to be a full statement. It has to have all the identifying information, the name of the individual, the beginning balance of the account, the ending balance of the account, the account number, the name of the institution that's holding the funds. All that information has to be available. It can't be a screenshot or something like that from your account. You have to provide an actual statement. So just understand that what you need for cash to close. James Law, your local owner.